Hello boys and girls, Big Scruff here. Yes, I'm still on holiday for those of you who follow the channel, and for those of you who don't, this might be a strange experience for you because I don't do the glossy video. I don't tell you you're going to be rich or anything like that. I just show you trading in the real world. And if you like that, do hit the subscribe button, genuinely helps. And if you find value, smash the like, and it convinces me to do more of this. Now, while I'm here, I'm currently out in Jamaica, just having a January break. I often go away in January because I find it a funny month, and it's nice to just get away after the hectic time of Christmas. But Winky has disappeared off down into the spa because she likes to go get sort of little treatments and things like that done. And I take an opportunity to do a little bit of work and have a bit peace and quiet. And funny enough, a bottle of water. Now that's going to be a shocker for you because we all know Scruffy likes a coffee. But today I'm knackered after an absolutely heavy night last night and I need to hydrate. Those in the Scruffy squad will know exactly what I've been up to. I genuinely believe life is for living, and it is. What we do as traders is to enhance that life. You know, you shouldn't be a slave to the machine all the time, because what'll happen is you'll overtrade. You'll certainly put your positions on too big because you'll get too big for your boots. And the moment you think you're king of the world starts crashing down. Why do I say this? Because I've done it. It's horrendous. And I had a message today in the Telegram asking what if they put a position on all 28 pairs. Well, my friend, in theory what you're talking about was kind of a nice idea, but in practice it is just commercial suicide. Focus on a single asset at a time and you'll do far better than trying to chase the dragon. Anyway, let us jump over into the charts. If the video is a bit jumpy, don't worry about that. It's just that I've only got a laptop rig with me while I'm away rather than my home rig, and it's a bit of a bugger at times. So let's jump on the chart and we'll look to do about 50 quid. You know, that'll be reasonable. I just want to show you how to do it, basically. Come with me.
Matron, take them away.
Okay, guys. So what we're going to look at today is the US Tech 100. Again, it's because this is the market that was requested. Now I'm going to turn all the indicators off so you can't see any of them. And what we're left with is a clean chart. And within this chart, we're going to have to figure out a direction, see some key levels, and then see if we can trade into those levels. So if you're going to scalp this thing, you kind of want to be looking out at a daily to start with. Now let's get rid of all of the drawings that I have, and we're going to build this from absolute scratch. Right. You want to look at the last full day. Now it's Monday morning here. Now for me the time is 8:52. So for you it's probably mid-afternoon. Let's have a look. And what we're looking at now, that was Sunday. The last full day was actually this one. Okay, so we're going to draw in a level. I'm just going to drop that there. Just going to change the format of this into solid lines. Change the color. I'll make them black. Another one. Whoops. Like I say, I've just got my laptop and it is a bit of a pest. See that? See what I'm looking for here is an open, close, high, low, and I'm also going to look for the midpoint. Okay, center ground. Now, you'll often hear it as midpoint or equilibrium. And all equilibrium means is middle. Okay, well, that sits there. Make that a dotted line so I know that's the center ground. All right. So what can we see here? What's happening on a daily chart? Well, at the moment we can see it's in a good uptrend, and it's pushing up into these levels here, in and around where the price has been. Sort of this swing low, if you like, and then you've got another swing there which it might have a go at next, and this cluster. All right, so it looks like the daily is pushing up. It's also sitting in the top quadrant of that. Right, it's come down a little bit. What's a 4 hour got to say here? Well, the 4 hour is shown it's clearly up. We've got a hammer here and then pushing into these. Now we'll try and revisit these levels. Why will it try and revisit them? Because that's what the market does. It pulses and it moves backwards and forwards. And if I was to put a bell curve on this, and it sort of would run up through, well, I'll put you one on just to highlight something with a trend line. Now, if you run that trend line straight through the middle, you'll see that it kind of snakes in and around it, just like so. So what it's doing is this. Now, I'll jump on a whiteboard sometime and I'll show you that a little bit cleaner. So I've just put this on really rough and ready. Let's have a look. So, kind of there. That's probably it. And there you are. You can kind of see it. It comes up, swings underneath, swings back above it, tries to go underneath, swings back above it, comes and round. Now, a trend line is actually really subjective, because where do you place it? It's very difficult. So I'm going to get rid of that altogether. Don't need it. I only need these. But what we're essentially looking at is a meandering move to the upside. We know it's in the upper quadrant. So let's have a look at an hourly chart. Now this will help us immensely. Okay, what can we see here? All right. Now if we draw on fibs onto this, there is two you can use. Well, there's a few, but there's two main ones. You have this drive here and then this fall here, and you can use either of them. I'm going to use this one for now, and I'll show you for why. Because these are not indicators, guys. These are drawing tools. So just push that up. And I was asked why I have 76.4 on. That is the true Fibonacci sequence, because Fibonacci is constantly repeating itself. And if I turn this fib upside down, 76.4 is equal to 23.6. Likewise, 61.8 is equal to 38.2. So the sequence is correct. So what I'm looking at here is, I'm just going to put in that blue because I want to see the difference between the levels that I'm drawing on. Okay. Now what we are also doing is looking at a Fibonacci sequence, and that Fibonacci sequence pulls down onto the 50, which is here, and it's stopped dead on the 50. Okay, which happens to be very close to the mid ground. All right, so it's still showing signs to the upper side. Okay, now I'm going to put a fib inside a fib just to show you something. So take that from there, pull that down onto this, and now what we'll see is this one has defined the ratio of the market. And what that means is the price is currently still held inside this leg. And we're working on the ratios. Now it came down to the 50 and has rejected it. It has broken the 23 here, broken the 38, broken the 50. Now if it's broke the 50, it now shows signs of pushing up, and it's very close to this level here. So again, this is telling me this is moving upwards. So where could it move up to? Well, there's the 76 on this level here. So it's going to be in and around, just move that out of the way, in and around these two black lines between these three candles here. And the fib has defined that. So what we're going to do is we're just going to look to pull this further down. See what a 15 minute has to say. 15 minutes showing a little bit of weakness coming in, but this is the target point. Okay, so that means we have good orders here and here. So if I'm going to enter the market and I drop an order up there, that could be fine. But let's see if we can fine tune this just a little bit more. I'm going to drop it down onto 5 minutes and we're going to see where we are. This chart now looks a little bit nicer. I'm going to count back 5 candles. 1, 2, 3, 4, 5. So across this section here looks to be a nice buy order point. So just build that up. Just into roughly around this area. Just around there, just for now. And if I drop in 10 pips, that'll take me up to the next section. All right. So what I've got now is an order point for the market to come to, which is here. Now I'm not going to jump into the market. I'm just going to let it come to me. And reason being is I want to trail it. So what I'm going to do is I'm going to sort of just keep a little eye on it, and I'm going to trail down as it comes till I'm triggered in. Once I'm triggered in, I'll be happy to scale into it a little bit, just get a better price for my work, and then hopefully make some money. Now that's just building a chart up from scratch and giving some areas. Now there's other areas in this that could make it a nice area of entry. Now I know it's looking to break the tops to get into, say, this area here, but where would it realistically stretch down to? Well, there's a number of areas. There's a one here, obviously where this fib line is. Now if we look at the way these candles are made up, we just stretch them out a little bit so I can show you. Put this up there. So we've got a red candle close, so I can move this order down to above there, but I'm going to move that into there. That naturally increases the oops, sorry, I've got to be 4 points away. Okay. Leave it there for now, just a second. But as I was saying, you've got this area here that it pushes down onto roughly where this is. Now following this down, if we look at the pattern, there isn't anywhere else for it to look to till it gets down to in and around this area here. Why is that? Because it'll come looking at the swings. All right. Why the swings? Because if anybody was starting to look at a pullback to get into the market for it to go long, there'll be a cluster of stops in and around this area that the market will just naturally come down. Not necessarily hunting them out. What markets do when they're probing, they're looking for orders to soak up, you know, because if there's pending orders around, the market will naturally drift into them. It's just nature of what it is. And you'll often find that in and around levels like this. Okay, so the next area would be probably about here. I just draw point to point, roughly about there. Okay, so that could be a nice area. And then when we break down through this, we come down into this section, and if it gets beyond there, gets a bit naughty. But I think that's roughly about as far as this will come down, possibly into here. Let's see if I can get this back. It's still going to leave it where it's at. Okay. So there we go. Oh, you bugger. Oh, it's a thing with one of these computers. It goes a bit mad. Guys. Right. Okay. Let me just reset the screen because I've buggered it up, and I'll switch it back on, and I'll come back to you in a second.
Well, we're waiting.
There we go. That's better. Bloody hell. Right. Okay. So this is kind of set, ready to rock and roll. I'm going to try and move the price down if we can. Still a little bit better. Where's it at? Yeah, we should be able to get it into there. So just edge that down. That's it. Okay, guys. Right, so that's the principle what we're doing. What I'll do is I'll just leave the camera running. What I will say about scalping is, don't be afraid of it. You know, there's a difference between scalping and scalping. What I'm doing here is not really a scalp, it's more a day trade. What I'm looking to achieve is read the market sensibly, and then from there make a decision for a continuation, but just to the next level, which will be this one, in order to pay me. That's it. If you're looking to be in and out the market every 5 minutes and one thing and another, sadly, guys, you're going to be on the wrong side of the trade more than you're on the right side, and ultimately the market will win. And it's probably why there's a huge failure rate in this industry. You have to be sensible with what you're doing, you know. So this is systematic. It works out roughly what I'm looking at. I can see volume in the candles, and what that means is, if I just sort of illustrate this, big candles can show a flush out. Now there, so it's small, whoosh out of the ordinary, creating some kind of activity. Now, why is that? Because it's flushed up. There's no buyers left, so there has to be a little bit of profit taking. So that creates this relaxing point, but the general inertia of the market is up. So basically, you're just waiting for the market to relax back into this. Now, again, if we look at our friend Fib, now it's not too good on a 5-minute chart, but it will highlight something just on here. You can see that it starts respecting these levels. There it is. It's holding the 23. So that's telling you the pressure is still to the upper side. Now, if this is looking to burst through, you know, if I turn this kind of upside down, just rather than put an extension on, all right, go that way. All right, that means it's holding the 76, which is exactly the same. If it breaks through, which it has, and there we are, we triggered in. it'll move to the next said level, which is the 127. And sure enough, it tested it. Came down to that 76. Next candle went to the 127. Its next realization point from this single exhaustion candle is pretty darn close to that 161 or the daily level we marked in. And the next extension, which is 261, is pretty darn close to there. So what the fib is doing, it's actually mapping out the chart. You could even trade this with only a fib if you know how to read one. And that's what the Scruffy Squad's all about. It's about seeing the opportunities of the market and then capitalizing on them. And there we go. It's popping just as we speak, and it's following. Where's that stalled? Bingo. Bang on that 127. Okay, so it shows how important these levels are. Now we are targeting the upper one, so that's what we're going to stick with, and we're just going to see if this gets into it. Now I am prepared to put another order here if it bounces into that, and then I'll look to come all the way down to here to come back in again. Okay, but let us see how it goes, and I'll come back to you when the trade's done. So happy days. Okay guys, job's done. Take out this other order, just like so. So, because do take out your orders. I have in the past left them in accidentally, gone, had a cup of tea, drink, whatever, come back and thought, oh bugger, it's triggered me in. And then you've got to dig yourself out of a hole. So do make a point of taking those out. Now, because I'm on holiday, I was only really showing you an example. And as you can see, it didn't go against me a great deal. It was systematically thought out and then shot off up into target, pretty much where I wanted it to go. So it's hit that. So its next target is actually up here where the other one is. But I'm about to go down to the pool and enjoy myself because Winky will be done in a minute. And happy days. But just so you can see it, there you go. So while she's been down in the spa, just a little bit of work. I've done a day's wage, just messing about. So I hope this helps you guys. I genuinely do. If you're stuck, I'm very easy found. You know, you find all my contact details in the description below. Genuinely trying to make the channel better, so it'll be great if you subscribe, etc. There is also going to be, when I get home, we'll be starting Ask Scruff on a Sunday night, where I'll just live stream it. You can come along, ask your question. Cost of it is just click that subscribe button and I'll answer your question. If you can't make the live stream but you want your question answered, just send me an email. You find the details at scruffytrader.com and I'll read it out, answer your question, and away we go. So as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.